Hi folks, Scott here, and this is the wrap for Wednesday, May 22nd. What a day. Very interesting, disappointing in some ways as well. But before I get into that, let's talk about what tomorrow may bring us. This is today's 5-minute action. You see, we've basically taken out the range of the past 4 or 5 days. Market's still going live because I've got my backtesting webinar going on in just a little bit. I did explain to folks in the trading room, I think the odds are pretty decent. We're going to finish at or near the lows today, so we'll see what happens here. And if able, I may pause this video and try to get short here in the last 30 minutes. We'll see. But what I want to show you are the results of fading gaps. Since I don't know exactly where we're going to close, I'm going to show you the results of fading gaps after closing at least 1/2% of the value of the index down. So take 0.5 of 1665 and you come up with what? At least about 8 points, 8.5 points. So closing down a little more than 8 points on average, or 0.5% of the value of the index after a 200-day high close. Yesterday was a 200-day high close. Those are the only criteria, and there are the results. So pretty rare to have such a big move down, and this is going to be really unusual because it's probably going to close down a full percentage point or right at it. So it'll be even smaller sample sizes if I ran that scenario. It's only happened 30 times over the past 10 or 11 years, but 2 to 1 probability for gapping up the next day. And I'd say gap down is just historically average, small sample size, but 60-70% win rate, lost a little bit of money, too small to read into. So the real takeaway is you got a 2 to 1 probability of gapping up, and a gap up has lost a ton of money in a relative sense using 10 contracts or any number of contracts because the average loss is over 8 points. $4,000 in 10 contracts equals about 8 points. And the average win has only been about 2 points. So 50-50 trade on a gap fill on a gap up. Now with that said, this is such an extraordinary weak move. I wouldn't be surprised at all if this isn't a tradable scenario tomorrow. So we'll see. Just giving you a heads up. As always, these videos, I'm just showing one unique nugget that's in play going into the next day, and I always make my decision based on a collection of analyses that I conduct or get from my database, from our gap guides, and that I conduct in the morning. All right. So let me show you today's trade and analysis. We had decent sized gaps up in this opening area between the high and the close, and across all 8 individual gap guides, this was a pretty good setup. 72% historical win rate, right at just above my minimum profitability criteria, 1.3. So with such a high win rate and profit factor on around 1.3, you know the average winner is probably a little bit on the small size, but still met my criteria, no doubt about it. No unique risk factors in play, at least unique day factors. And in terms of unique patterns, on an up gap after doji during a bullish market historically has been a good setup. Good setup. See the numbers there, 70% win rate, 1.6 profit factor. So, let me show you one other thing. Let me go to the gap guides. Made it a little bit trickier. If you look at the ES, it actually closed with a perfect doji yesterday. Opening price was the same as the closing price. Our system defaults to a down day. So these are D-base zones. So gapping up was a DHO zone. It was the only one of the 8 indices that gapped in the DHO zone, which is historically problematic. Not terrible numbers, but not great either. YM was UHC zone. You see these futures here are a little bit weak on profitability, except for the Russell. So only one of the 4 futures markets met my criteria. The ETFs all met my criteria. See, strong numbers in the spider, which is this is what the ES would have shown something similar to this had it closed up by a tick. Diamonds look good. Good in the Russell, whoops, I missed one, Russell, and good in the Qs. So my comments that I posted around 9:20 a.m. this morning showed following up on last night's video wrap, an outside day and a 20-day high actually has had was actually favored the down gaps. Up gaps were just neutral, but when I looked at small and mid-size up gaps like we had today, following a 200-day high, 7 of 8. Now small sample size, but sort of fit with my belief the market is overdue for a pullback. And historically, shorting up gaps during even raging bull markets has been attractive. Not lately, though. See up gaps after 200-day high close and a lower daily low. So sort of a variation of this. 200-day high close and a lower daily low. Remember yesterday we dipped below the low, then reversed back. 13 of 14 winners going into today, and profit factor was something like 8. Meaning it made 8 times more in profits and losses. Extended target odds were high as well. Up gaps second half of the month have been historically a little bit problematic, but small sample size. So lots of analysis, lots of thought went into it, and there were mostly positive factors for up gaps today. And I thought it was worthy of a half-size trade, even though only 5 of the 8 guys met my criteria. So I said I would go short, half-size position, hold some for the extended target area. I actually set up to go half and half the extended target, which was actually 1663.75 today. I was in a rush adding that. 1663.75 is shown on the guide. You can calculate it on your own. And I wanted to get my stop above the prior highs, ideally 2 points above. So, look at this crazy action for today. I went short 1668 was the low. I was filled at 1668.25. I was actually open and the low of that. I was filled at 1668.25. Ended up using half my stops at +5 and half at +7. So an average of 6 points. I wanted to get up there at 75. 2 points above, 75.25, 2 points above. As it turned out, it did not matter. Pretty unusually, this thing ripped to the upside. I got to admit, it's caught me off guard. Just how straight it went without any even trying for gap fill at all. So some unusual price action. Got stopped out, half-size trade, but it's been tough lately. Then it rolled over and sold off hard. Now the range guides came out. Nothing was favored other than high breakout, which did not trigger, but it looked very good if it had triggered. The only trade I did all day, and again I may do one here right into the close, the only trade I did was I told folks if we got more than 3 points, and this is a really great nugget just from my chart time and experience, with such a powerful move to the upside, I told folks if we got traded back down inside of yesterday's highs by more than 3 points, normally I use a 2-point rule, but with such a volatility, 20-point move there in the first hour, expanded to 3. If we broke inside the prior day's range by 3 points or more, meaning if it went below 1670.25, then I thought odds of gap fill were very high, as well as the extended target. I was looking for that, but I've missed it. I had company I had a developer here at my house lunchtime and a conference call with Tim. So missed it. That was a little frustrating, but when I did check in to see what was going on when I hung up, it was right around 2, and I saw the wick form, and at that point, that big wick and such momentum to the downside, and many market participants seeing this as a potential ugly day, an exhaustion kind of day, I wanted to get short with a stop just above the high of that. So I used a 4-point stop, went short, scaled out +4. My plan was to do +4 and hold the rest on half the trade, hold the rest for 1551. As it turned out, you can't see it here, there's a 600 EMA, and it came down, tested it, went underneath it right here, bounced back up. I closed out at +8 because it was a pretty good sized position for a discretionary trade for me. Locked in a nice win, average 6 points, and then of course it rolled over and filled the gap from, I can't show it to you. There was an unfilled gap on my trading charts. Oh yeah, you can, there it is. 1648.50. Went down and filled it. So pretty interesting day today, and bears might be back in the house, but we'll see. It's going to take more than one day, I think, to shake these bears out of their caves and get rid of the bulls, but at least get rid of some of them. Anyhow, that was my day, and that is the wrap for Wednesday, May 22nd.